In the next 5 years, things would be different. The world is progressing at a fast speed, and technology is really driving the world economy. Apart from that, increasing inflation, interest rates, and global crisis are all key factors to consider while investing. The stock market is recovering, in general, after the pandemic hit. Companies are reporting improving first quarter results in 2022. We would be looking into stocks from different industries, which hold growth potential in the long term. At the same time, these stocks need to be well established, as we need to minimize our risk considering the economic circumstances. We have compiled the 5 best stocks for you to buy and hold for the next 5 years. As things are recovering for good in 2022, we expect these stocks to continue the growth, and give you good returns in the long run. But before moving forward, if you're watching our video for the first time, please subscribe to our channel, and click on the notification button. Without further ado, let's start. First stock on our list is Bank of America Corporation, having the ticker BAC. Bank of America looks to be a key player in the banking sector. The bank has performed well over the years, and remains a key player in the sector. Considering increasing interest rates, banks remain a prominent place for investors. Bank of America is working in various areas, covering both local and international markets. In the first quarter of 2022, the bank posted strong results despite challenging markets and volatility. The growth strategy of the bank is what keeps it pushing through these tough times. For the quarter, the net interest income increased by $1.4 billion year over year. It was mainly driven by strong loan and deposit growth. Moreover, year over year, the bank grew loans by $70 billion and deposits by $240 billion. Bank of America ended the quarter with a strong balance sheet, having $170 billion of regulatory capital. This capacity allows the bank to grow loans. With the current capacity, the bank is nearly returning $4 billion back to shareholders. With a strong balance sheet and improvements in earnings, the bank looks to be in a great position to experience growth. With the forward curve expectation of rising interest rates, Bank of America can highly benefit from its deposit franchise. BAC seems a good option to buy and hold for the next 5 years. Second stock on our list is Uber Technologies, having the ticker UBER. Uber Technologies has experienced great adoption globally in such a little time. The company is growing, and we can see it among top firms in the future. Uber may be facing a few difficulties, but the exponential growth potential is immense. There are quite a few things that make Uber a promising stock for the future. Uber is working on an autonomous food delivery project. We know autonomous vehicles and autonomous delivery will be part of our life in the coming years. The company is exploiting the space and wants to get hold of it. Recently, Uber, in collaboration with a driverless technology company, Motional, launched a pilot test for autonomous food deliveries on the Uber Eats in Santa Monica. The delivery demand is growing rapidly, and Uber's move to launch autonomous services is prudent. In the first quarter of this year, the company outperformed its quarterly guidance and strong incremental margins. The revenue increased 136% year over year to $6.9 billion. This was driven by an increase in gross bookings, which grew 35% year over year to $26.4 billion. Uber's free cash flow is now approaching break-even, which now allows the company to think about investing with a free mind. The company expects to generate meaningful positive free cash flows for the full year 2022. With things looking good for the company, UBER stock can be a good option to buy and hold. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Third stock on our list is AmerisourceBergen Corporation, having the ticker ABC. AmerisourceBergen is one of the leading pharmaceutical distributions around the world. Investing in the healthcare sector can be one of the safest ways to grow your portfolio. The company is expected to increase its earnings per share by 10% in the next 5 years. It is working on lowering its debt. ABC will resume its share repurchases with excess free cash flow. It will be completed under the company's disciplined approach for allocation of capital. The company remains committed to paying down $2 billion in debt by March 2023. That's within 2 years of the June 2021 acquisition of Alliance Healthcare. AmerisourceBergen is in a great position to run its operations. The company has outperformed the market so far this year. In the second quarter of 2022, the company improved its revenue by 17.4% year-over-year to $57.7 billion. While the earnings per share were $3.22 per share, surpassing the consensus estimate by $2.99 per share, and year-ago earnings of $2.53 per share. The company ended the quarter with a gross profit of $2.2 billion, which increased by 45.5% year-over-year. Following strong outcomes, the company is expecting to report stronger than expected performance of several of its businesses for the fiscal year 2022. AmerisourceBergen anticipates diluted earnings per share to be in the range of $10.80 to $11.05. While the company expects its U.S. Healthcare Solutions operating income to be in the range of $2.42 to $2.48 billion. ABC can be a great buy for the long term. Fourth stock on our list is Cloudflare, having the ticker NET. Cloudflare is a leading cybersecurity firm that provides a range of cloud services to businesses all over the world. The company is establishing data centers worldwide to allow users to host websites on its servers. With physical data centers near to the customers, their websites will run faster. Moreover, the company will better look into the security functions of the websites as well. The company is setting up its first office in the Middle East in Dubai. Dubai is home to one of the largest growing economies, and especially now because of its presence in the cloud business. Cloudflare has more than 154,000 customers and increasing. The company has now created an excellent market for itself. For the first quarter of 2022, the company's revenue increased by 54% to $212 million year-over-year. The large customers who spend more than $100,000 annually grew 63% to 1,537. Moreover, the company posted a positive adjusted operating margin of 2% for the first time. Cloudflare might not be profitable at the moment, as it is still in the early stages of growth. The company expects to conquer a $100 billion market opportunity by 2024. This year, the company is expecting around 45% revenue growth. With all the positive projections and developments, NET is definitely a stock to watch for the long term. Last stock on our list is Chevron Corporation, having the ticker CVX. Chevron is one of the leading integrated energy and chemicals resources firms. The company's stock has made a stellar growth this year, touching its all-time high. But what makes CVX bullish despite trading at its highest? With the increase in oil prices, Chevron has benefited highly from it. In the first quarter of 2022, the company almost doubled its cash flow from operations to $8.1 billion. While the free cash flow totaled around $6.1 billion. This much cash helps Chevron to grow its business and capital spending, and also return more cash to shareholders. The company has now its dividend for the 35th straight year in early 2022. Moreover, Chevron plans to buy back as much as $10 billion of its stock this year. Considering the Russian ban, the oil market will continue to remain in an unprecedented situation. With strong oil prices, CVX will continue to rise in the near term. In the long run, Chevron's growing cash flow will help the stock to be in the bullish zone. So, CVX is a great stock to keep on your watch list for long-term investment. That was it from this video. We hope you'd have liked it. Before leaving, please subscribe to our channel, and click on the notification button. You can also visit our website, stockstelegraph.com, for daily news on the market.